Market Chameleons, how's everyone doing? It's Friday. How you doing, Dima?
Good morning, Will. How are you?
Awesome. Thanks for joining us, everyone. It's Friday, Dima. Great way to end the week with the Chameleon Morning Report. Everyone, thank you for joining us. If you're on for the first time, make sure you subscribe to our Market Chameleon YouTube channel. You'll be alerted to all new videos, and thumbs up are always appreciated. With that, D, are you ready to go with the disclaimer?
Yep. Thanks, Will. Thanks, everyone, for joining us. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker-dealers, and we're not telling you what to do. We're just sharing ideas. If you need professional help, please contact your broker. That's what they're there for. They should be able to answer your questions, provide you with guidance. There's this disclaimer.
Great.
And let's get started. Let me see. Let me share my screen real quick. All right. Let me know if you see my screen well.
It's up.
Okay. So let's take a look. We'll take a look at this report first. These are stocks that are moving into pre-market hours. I thought we would also take a look at what ETFs were moving yesterday to see where money's flown into, where money's flown out of. We could also take a look at how options are predicting. I'm going to take a look at some short-term options and where they look like they're pricing in very high moves relative to historical averages, or where option prices are pricing in kind of muted moves versus historical averages. And then we'll get to the earnings. And of course, if you have any questions, Will, let me know. I'll try to get to those as they come in.
Cool.
So this is pre-market report. We're looking at stocks that are trading in the pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. Let's take a look at stocks with higher market cap. I'm going to use this filter for stocks 20 billion market cap or higher. So we're going to have a few of them, actually a bunch of earnings coming up. So these are percentage gainers here. These are the symbols. These alerts within E is telling us that they just reported earnings. So these are related moves to an earnings. If you hover over that N, that's the headline news for it. So I think this is Zillow, ZZ, up 9%. Looks like on 30,000 shares, not that much trading in the pre-market hours. TDD, that's only 11,000 shares trading in a pre-market hour. So not a lot of volume here in anything I see. Roku, they reported earnings up 4.1%. CVS. So I don't see like huge volumes even in here, but these are kind of, so far, these are the pre-market indicators. In the pre-market hours right now, 17 made the percentage gainers list, 21 percentage decliners list. So a little bit more negative in market breadth than positive, but you know, it's almost equal. Nothing crazy going on here. Let me just look at the unfiltered report really quickly to see what pops up at the top. So got MOGO up 86%. That's on 11 million shares. Let me just hover over here, see what's going on here. So there is some news on or something with Apple Pay, Google Pay. You want to take a look at that one real quick, Will?
Sure.
Let's see. So here he goes. MOGO software technology closed at $1.34 yesterday. Here's the 52-week range, 56 cents, $3.15. Here's the pre-market chart. So, just kind of taking off here. Pre-market VWAP price, $2.36 on 11.7 million shares. That compares to a float of 19.7 million. On a relative basis, that's very active right now. Here's the news on it. I'm not going to get into the news too much, but there is news, related to this move. I'll let you guys read that and interpret it. Let's take a look at its historical gap history, see what the stock tended to do after gapping up in the morning. So this is looking at the 12 largest gap moves in the last 3 years. And these are the dates of the gap moves. Here we have the percentage gap to the upside. There's some notes here on that day. If there's a press release, you could hover over, read about it. If the market was up, it'll give you like a little indicator here. But let's take a look at the 12 largest gap moves. On average, the move was up 27.6%, with a high move of 175%, which was right here, July 15th. So that compares to today's 90%. So way above the average. Not as, we've seen it as high as 175%, but it's up there, way above that average. This is what it tended to do after the open. So from the open of the day to the high of the day, the average move was 4.5%. These here indicators mean that a lot of the times it just kind of opened and that was the high of the day, moved down. From the open to the low of the day, the average move was down 16.2%. So a little bit more biased towards the downside than the upside. And from the open to the close of the day, we see that 75% of the time it closed lower from the opening price, 25% of the time it closed higher, average loss 11.2%. Again, there is some news on it today, so take a look, see what's going on there. You guys interpret and see if that move is justified. But this is looking at a historical price return distribution of the stock after gapping up in the morning. If you don't have any questions, well, on the pre-market, we can move towards, let's take a look first, see which ETFs are moving yesterday, and then we'll go to the earnings.
Cool.
Okay. So I'm going to go here to the screeners, take a look at the ETFs, see where money is rotating, especially like now after the election. Maybe we're going to have some changes in laws, rules, and maybe some industries will benefit, some industries may do worse. And let's see how traders are positioning themselves. So I'm going to first filter out ETFs that are non-leveraged. In other words, I'm taking out those, double, triple daily returns or the inverse. And now we have just the regular ETFs. And so this is the symbol, this is the ETF family, the name of the ETF, price change, volume, relative volume. So this is taking yesterday's volume as a ratio of the 90-day average. So giving you that ratio. And I'm going to sort this by percentage change to see biggest decliners first, and then we'll look at the biggest gainers. So in the decliners list, this one, not a lot of volume. I'll skip that one. Here's 5.5 million. That's natural gas. That looks like it was down 3.9% on volume. The volume was 1.1 times its average daily volume. Big banks index over here, that's low volume. I'm going to skip that one. Here's some 475,000. Let's go to a couple that are, in that trade a little bit higher volume. So here, this is kind of the VIX, the short term that was down yesterday. Market was up, so that's kind of expected. 36 million shares. That's the VIX that was down yesterday as expected. So not a lot of ETFs that were down big yesterday on a percentage basis that trade a lot of volume, other than maybe this natural gas over here on 5.5 million shares, down 3.9%. Let's take a look at percentage gainers. So here, top of the list, cannabis ETF, Potex, that was up 14% yesterday on volume, 9.4 times its average daily volume. Here we have another one, cannabis. So it looks like, we kind of seen this, them coming in and out, but still more pressure to the upside keeps coming back. It seems like silver miners up 11.9%. That traded 2.2 times its average daily volume on 3.2 million shares. Solar, TAN, up 11.4%. That traded 4 times its average daily volume. And again, you kind of see money keep pushing it, coming back in there all the time. The idea is that solar energy, clean energy stocks will benefit if Biden wins and starts changing some of those rules, maybe pushing stimulus in that direction.
Hey, D, can you, if like in the cannabis ETF, if I wanted to compare its makeup, how would I do it from here?
Let me go to, let's take a look at POTX. I'm just going to open up a new screen and see if we have those. So right now, I just went to the POTX. This is global. Let me see if we have the holdings. So here I'm on ETFs, ETF holdings. So there's only 12, looks like there's only 12 stocks in here, but these are the symbols. These are the companies. So let's take a look maybe on a 2-week basis, where it's coming into. So this stock, ACB, up 34% in the last 2 weeks. APHA, up 20%. This one, I'm not sure why that's in there.
Yeah, that looks like an error.
I'll take a look. Yeah, that's weird.
I'll write that down. Email.
TLRY, yeah, 16%. Yeah, that doesn't look, unless we're getting the name wrong. Let me see. I'll take a look at that. CRBP, up 11%. Not a lot of them, but
well, it's just interesting to look at them for like Tilray seems to be lagging a little bit relative to, like, I don't know, Aurora, or it's interesting. You dig into them, which one is actually, maybe if you want to get into the cannabis space, this is why maybe going to POTX is better than trying to analyze which one you want to get into.
Yeah, exactly. And you think maybe that if they're managed, maybe they rotate them somehow. Maybe they replace better ones with. I don't think there are that many out there right now that are public companies. Not sure, but the idea is that they're gonna replace them maybe with better ones or take them out. And I'm not even sure, with these cannabis, even if they legalize, you don't know which company will do right. Trying to pick which company will do the best is very tough. We don't know anything about them. They look like small cap stocks. I doubt that they're making money right now. Here's one. So
I just know when I know Beyond Meat's earnings coming up. I mean, when we first and Jake may be the only person who was on. He may have been the only one who watched the show when my brother was doing it. And the cannabis stocks were hot stocks at the time. I think Tilray was over $100 a share. I think have come way down to earth.
I think the problem is that they're also, at the end of the day, they're just dealing with a commodity, right? You're not dealing with some kind of proprietary technology, so the margins you would expect in the long term would be small if you're competitive.
Yeah, no, it's definitely it will be a volume game.
Sure. Yeah. I don't think they have patents on selling pot, and I don't think there's going to be proprietary technology.
Well, there probably are patents on strains of marijuana for different purposes, but yeah.
So maybe, but I would expect whenever you're dealing with commodities in the long term, I think that the margins get squeezed. We're not like talking about a software company like Microsoft, or Google, or even like Uber or Lyft. They actually have technologies behind the scenes that even something like Twitter or Facebook would be very hard to replicate.
Yeah, and it's amazing. Like, you use Lyft and Uber, right? They now have basically a monopoly to hire independent contractors in California. Any small business can't do that, right? So if you're Domino's Pizza now and you're in California, the way I understand it, and anyone can correct me because I'm probably wrong, but the way I understand it is Domino's Pizza probably is going to have to hire Uber to deliver their pizzas, right?
Yeah.
Because they can't, anyone who works for Domino's is going to sit under, they're not going to be part-time workers, right? You work more than 50. So it's going to be anyone who deals in the delivery space is going to be at a disadvantage to Uber and Lyft.
Yeah, exactly. So that, right. So, but right for now, look, money's flown into them. People are getting prepared. Maybe there is going to be some kind of a big boost, for these companies. Maybe they're already in place to be the first ones to benefit from any type of legislation change. Obviously, look, up 14%, but look where it was. The 52-week high, 1842, 52-week low, 652. Right now people are getting in. We'll see. We'll see. But they're smaller companies. I don't even think any of them make money right now.
They do not.
So, let me go back to this ETF screener. So here we go. Cannabis, silver mining, that's up. Solar, that's another one we've been seeing, right? Money flowing into. It's another space. They might be a big benefactor as well, but that clean energy space, these clean energy stocks have been around for a while, right? Solar, battery, all these clean energy, and they've been having a tough time because they still have to make things economical, right? They have to make it where it's practical. And I think the issue with a lot of these clean energies is that they solve one problem, but a lot of them create a different problem, right? And just like they're saying with batteries, you have these electrical batteries, but what are you going to do with them when you need to dispose of them?
Yeah,
but
and the mining for their core components is brutal on the environment.
So they're gonna have. It's not a perfect solution. They're working hard at it, and some of them have very cool ideas. Some of them seem very promising, but you might have a solution to one issue that you're addressing, but at the same time, if you're creating another issue, it might be not the best. So far, I don't think we've come up with the great solution. But look, those solars, they've existed for a while, right? The solar companies, a lot of these other clean energy companies, they've existed for a while. They might get a boost now. So who knows? They might get some stimulus going their way.
I would think.
Yeah. Gold miner. Huh?
Yeah, I would think based on the way the election looks like it's turning out, it's going to be a good.
Yeah, so they might be. Yeah, they definitely might benefit from it, and they're already in there, right? So they're going to be the first ones to benefit, the ones that have that infrastructure in place. Gold miners going up. Here's a couple clean energy, silver miners. So I think also right now people are positioned that we're going to get a big stimulus coming up, right? So they're going to flood the economy with even more money, print more money. Have you seen the Bitcoin? I think the Bitcoin went from its high, it crashed, it's coming back up, right?
Yeah, no, it's almost near its high.
It's almost near its
it's 15,000. I think it hit 18 or 20,000. So it's come a long way back.
But it fell as low. I think after hitting that 20,000 mark, it fell back down to almost 6,000. Now it's coming back up. Silver's going back up. Gold's going back up. I think that inflation bet is also coming back. So we see here silver miners, gold miners up. So kind of same story coming down the line. Here lithium battery, that was up 7.7% yesterday, trading 3.2 times its average daily volume. And this could continue for a while, right?
Yeah. I mean, it is interesting. I mean, you look at silver got as high as almost $27 in August. And it traded, it was up yesterday. It's up again this morning. But it's still at $23 off its high. in the last 4 months. So maybe some
Yeah.
interesting opportunities.
So we'll keep an eye on it and see how this plays out. Obviously, we've seen these pops in them and money kind of flowing in, so the volumes are pretty high relative to their average daily volume, and they've gotten some pretty decent percentage gains. So we'll keep an eye on those. Let's take a look at what's coming up in the earnings. And we'll take a look at stocks that are expected to report earnings in the next 2 weeks. I'm going to use this filter to look for stocks that on average trade at least 5,000 option contracts per day or more. And let's take a look in the next 2 weeks, what's coming up. So November 9th, Workhorse, that's right as of yesterday. Those options were implying a move of 18.6% in either direction. And that compares to a 4-quarter average move of 5.5% and a 12-quarter average move of 7.8%. So we see that implied move right now. That's 13% above its 4-quarter average, 10.8% above its 12-quarter average. And the high move on that in the last 12 quarters, 20.6%. Let me see if McDonald's, just kind of looking for the bigger names right now. McDonald's, that's expected to report Monday before the market opens. The option straddles price and move of 3.8% in either direction. That compares with a 4-quarter average move of 2.4% and a 12-quarter average move of 2.3%. So we're 1.4% above that 4-quarter average, 1.5% above the 12-quarter average, and the high move on that stock in the last 12 quarters, 6.3%. Plug. So this one also, I think, is in the alternative energy, right? PLUG. And I know this one, this was as low as, here we go, Plug Power. This was as low as $2.53. Now it's $18.83. So we see how it's popping close to its 52-week high. I think they're creating like hydrogens, fuel cell technology. Again, very interesting technology. They've been working hard at it, I think, like for like over 10 years now, probably. But let's see, coming up with earnings expected to report Monday before the market opens. Right now, that straddles pricing in a move of 15.4% in either direction. That compares with a 4-quarter average move of 7.8% and a 12-quarter average move of 6.3%. So right now, 7.6% above the 4-quarter average. Implied move is 9.1% above that 12-quarter average. And the high move in the last 12 quarters in Plug, 15.7%. Let me see what else we saw. Nikola, that's in that electrical car. Is that correct?
It's actually, their model is going after the large 18-wheel trucks. That was they're going after large trucks. That's how they were going to build their business. And then
they had some issues, right? I remember they had.
Yeah, their founder seemed more salesman than than Thomas Edison. I mean, that's the one thing about Musk, right? I mean, the guy lives, breathes his projects. He's he's like Edison or Ford. I mean, he is in the shop building it, idea generating, coding. The founder of Nikola, more businessman, salesman type of guy. And
he was trying to cash out.
Yeah.
That's like he's just trying to build. I think I read an article or maybe it was even a tweet. I don't know if it was an article or a tweet, but he was very close. Going into bankruptcy, maybe even a couple times, so, but he just believed in his ideas and his vision. But I think even with Tesla, he was pretty close, a couple times running out of money. Anyway, Nikola, that's expected to report Monday after the market close. that straddle is implying a move of 16.8% in either direction. That compares with a 4-quarter average move of 9.8%. 12-quarter, so it doesn't look like we even have a 12-quarter, right? Because I'm seeing all these, the 4-quarter average and 12-quarter average match. So we probably don't have enough data on there. The stock must have been out there like what, a year or two?
Yeah.
Here's TLRY. So TLRY, we just talked about this stock. That's the cannabis stock. As of yesterday's close, the straddle was implying a move of 23.2%. That compares with a 4-quarter average move of 9.7% and a 12-quarter average move of 9.6%. So 13.5% above that 4-quarter average, 13.6% above the 12-quarter average. High move on TLRY, 20.6% in the last 12 quarters. Here's Beyond Meat. We talked about that one before. That's reporting Monday after the market close. Right now, that straddle is implying a move of 12.9%. That compares to a 4-quarter average move of 17.6% and a 12-quarter average move of 20.4%. So right now we see pricing in, that's coming in below those 4-quarter and 12-quarter average moves, and even comparing it to the average implied move coming in, we're below that 12.9% compared to 14.3% and 14.6% averages on the 4 quarters and 12-quarter moves. So I think that I hit the big.
Yeah, you know what? We had one question, and it was Pavel right at the beginning, and it's something I didn't have an answer to get to him, but maybe we could look at it as a collective group. It was QEP. It's a penny stock, but it had some strange option volume in it. And he's wondering, is this anything he should look at? Is it, I mean, to me, it looks strange too. It's at the money calls, but it was $1 stock and they're paying 50, 60 cents for the calls. I'm wondering what you think. So the stock is QEP.
So here's the stock price, 90 cents. I do see 9,000 contracts traded in QEP. I'm going to open up the options chain real quick, just to get a look at what expirations. So here are the different expirations, and I see 4,465 options traded January 15th, 21st of the 21st expiration, and then January 21st of the 2022 year expiration. But just looking at how these volumes and the fact that we see a 4,000 here, 4,000 here, and like barely anything else trading, I would say this is probably a spread. It looks to me like some kind of a time spread, but I'll take a look closer. Let's look at January 15th. So here's the options. It's looking at the strike of $1, 4,000 traded. So we see these, this is the market, 10 cents, 20 cents. I'm going to take a look here. And I see, so a bunch of trades. It looks like it was chopped up in different lots, on different exchanges. And I do see that it's multi-leg. So that which means that this trade is part of another options trade. So there's another options trade associated with this. The exchanges don't tell us what it is, but we would have to go in there and kind of figure out what we think happened. I'm just going to take a look at that based on this volume. The VWAP, the volume weighted average price, is 20 cents in this option. So that's where that VWAP price is, 20 cents, traded as high as 20 cents, as low as 15 cents. And it looks to me like most of these are, close to 20 cents. So let's see what the other side of it is. So we'll keep that in mind. 48 days out on average, this option traded for 20 cents. Let's go look out. So this is looking out, 304 trading days out. And this call here on average traded for 60 cents. Okay, so same thing here. You know, we see big lots here, multi-leg. So to me, it looks like a time spread, which was done for about 40 cents. Okay, so time spread 40 cents. That's what it looks like to me. So let's take a look at that. So you have the option. This is very low price. You buy the stock at 90 cents. You could do a time spread for 40 cents, which is saying I'm going to buy these for 60 cents. And I don't think anything's going to happen, or this stock is not going to go above $1 by January 21st. So I'm going to sell that for 20 cents. So instead of buying it for 90 cents, you're paying 40 cents. That it's going to go above $1, but after this expiration. That's kind of the viewpoint, I think, from the buyer standpoint. Let me just make sure. I said 60 cents, right? So 60 cents, right? So it looks to me like a 40-cent time spread. On the other hand, somebody who owns it might be collecting that 40 cents because that covers, you know, if the stock just sits here and he collects that 40 cents, that cover half of that downside. Of course, if it goes above $1, you know, before January 21st, then he's fine. Does that make sense?
Yep. No, it makes a lot of sense. We actually ran over the time. Markets have opened. Everyone get in front of your terminals if you're going to trade. Dima, great job as always. Thanks for all the questions, everyone. Remember, the forum is a great resource. Use it. Thanks, D.
Thanks, everyone. Have a great weekend. Hope to see you guys on Monday.
All right. Have a safe weekend, everyone, and a great trading day. Bye.